Traders, I just wanted to take a moment here and address something that came up this morning in the room, talking about the volume. Today's Expiration Friday, so we will see a big jump in volume. But that volume is really going to be concentrated to really two key events, and those are the daily auctions. Now there are many auctions throughout the day where buyers and sellers are paired off in the automatic systems, but by far the biggest typical auction is usually the opening auction. Here's a 5-minute chart of Google with the volume histogram below it. Here's the opening 5-minute candle and also the opening 5-minute bar. Now you can see that big pop in volume there. It's much bigger than any other 5-minute bar throughout the 2 days that are covered on this little 5-minute chart. And that big bump in volume represents the opening auction. And what it is, it's really just it's a matching system that's run by NASDAQ. And what traders do, for the most part, it's almost exclusively institutional traders, is if they have business to do, what they want to do is try and capture and get involved in that opening liquidity. So you've got a point here where buyers and sellers are going to be active, and easiest and the most elegant way to usually do it is to try and pair off your order with somebody else in the opening auction. So what happens is, let's say you're an institutional trader and you're working for a mutual fund, and let's say you want to sell 100,000 Google on the open. What you do is you put that 100,000 for sale into the opening auction. It's called the cross, where you cross the orders between buyers and sellers, and then if there's an offsetting bid or bids that total 100,000 shares, that order will pair off and it will be traded on the opening print, and that's why you get that big spike in the volume. Now what happens is sometimes either the supply or demand will overwhelm the opening auction, meaning that there's still net for sale or net to buy, meaning let's say out of all the institutions participating in the cross, let's say there's 1 million shares for sale, and of all the institutional people on the other side of that bidding for stock, let's say there's only 900,000 to buy. So that leaves a net 100,000 share overhang for sale. So what will happen is that 900,000 shares will pair off in print, leaving 100,000 shares for sale that's going to have to be worked off in the open market. This is what kind of makes this big print, this big spike on the opens. This is one of the things that makes the opening prices very important on Expiration Friday, because they're a meaningful reference point, because so much stock has traded at that level. And as you go throughout the day and you move along, then obviously you can get to the closing cross. That's the other focal point. The closing cross, especially on Expiration Friday, is also a very large print where institutions will be offering and bidding for stock and trying to get their shares paired off. So what this does is it kind of makes the day's volume kind of a barbell, where you have a bunch of volume in the morning, and then there's typical back and forth trading throughout the session, and then the other end of the barbell is that closing cross, where you get usually another very large print. This is also very typical of IPOs, and obviously with Facebook they had that problem with the opening cross. But these crosses happen every day in all NASDAQ stocks and also all New York Stock Exchange stocks. But on Expiration Friday, usually there's more to do. The business is bigger, and that's why we see those big prints in the very beginning of the day, and then also again at the very end of the day.